The International Monetary Fund says some of the biggest risks to the global economy are now in emerging markets, where firms have accumulated massive amounts of debt. Despite slow growth, that has continued for around 5 years now. Shin Se reports.
The International Monetary Fund says private companies in emerging markets have raked up an estimated $3 trillion of debt due to overborrowing, raising concerns about a possible credit decline and capital outflows. At the fund's annual meeting in Peru on Wednesday, top bank official Jose Vinals said the unprecedented lending spree has come to an end with the sharp decline in prices for oil and commodities, largely attributed to China's economic slowdown.
Higher leverage in the private sector have left many firms in emerging markets more susceptible to economic downturns and emerging economies more exposed to capital outflows and to deteriorating asset quality.
He said the risk is that shocks from bankruptcies in the developing economies' private sector, particularly Latin American economies, which are heavily reliant on commodities, could be amplified in global financial markets. The worst-case scenario, he said, would be a vicious cycle of fire sales and volatility. He added that overborrowing in rising economies is estimated to add up to some 15% of their gross domestic product and nearly 25% of China's GDP. Vinals also said the IMF doesn't think it is time for the U.S. Federal Reserve to boost its key rate, saying that wage and price inflation have yet to gain the strength needed for a rate hike at this stage. Once the Fed does begin to raise rates, emerging markets are widely expected to see further capital flights and further currency devaluations against the U.S. dollar. Shin Se, Arirang News.